Okay guys, this is a hard video to make, man. Fuck it, really hard video to make. I don't even know how I can get through this video. Okay, so I've been looking at a lot of not just charts, but lots of quant data as well from like into the cryptoverse, CoinGlass, a shit ton of things. And man, this rejection that we got just now, I need a drink. I need a fucking drink before I tell you guys this. Just hang on. Fuck, man. It's not good news, I'm telling you. I'm stressed. I gotta get on the fucking elliptical. I gotta get on the fucking elliptical right now before I tell you guys this news. No, I can't even do this either. I gotta sit down and tell you guys. So, Bitcoin is forming this like major trend line from 2017's high, 2021, and it's not looking good the way that the rejection is right now. Whales are just selling. They're fucking selling right now. Ethereum is looking so fucking bearish right now with the MACD crossovers right at 4K. This channel is getting rejected so hard right now. And every time we're trying to break above it, what happens is the bears are selling or the whales are taking profit. I'm just fucking with you guys. You fucking idiots. Okay, guys, let's be real for a second, okay? The bull market is not fucking over. Okay, it's not even close to over right now.
All right, so that was courtesy of Philic1 or Philicone1 Crypto. Not really sure how to say that, but I completely agree. I don't think the bull market is over, and I think we're just getting started. All right, so I want to jump straight into this analysis for Bitcoin Cash. This is going to be an update on some things that I'm still looking forward to. So we're here on the 3-month chart, and the very first thing I want to refresh your memory on, if you've seen my videos on Bitcoin Cash before, is price getting above this $718 price level. This 3-month high would be the target for me. This is the first of 3 targets that I have for Bitcoin Cash, and as of the 3-month chart, we are still on track to that target. So what this would look like was what recently happened on Binance chain. Let me just show you that. BNB. So here, this is what it would look like. Okay, so price forms a bullish fair value gap here. This is an area of inefficiency, also used as potential support. Price will then reach into that area, and if we get respect of that area, it's likely that the very following candle will be the one that sends us through external liquidity at the high that sent us into the imbalance in the first place, which you can see is here, and price broke above that, and now BNB naturally fluctuates between these mid $700 levels. Okay, so anywhere between 710 and upwards of 785. Okay, so if I go back to Bitcoin Cash, you can see that we are in a very similar situation with price closing just on top of this fair value gap, and then the very next candle pushing away from the fair value gap. All right, so this is still a bullish signature, a swing low inside of a key level heading towards external liquidity. This is a magnet right now, but first I want to show you something that's happening inside of this wick here, and it's likely going to explain why we're not getting the same type of behavior that Binance had. I believe Bitcoin dominance has a big part to play, but I'm just going to drop down to the monthly and show you what I'm seeing right here. So look at the current candle, December's candle, and look at the size of the body on this candle. The wick here, it's definitely not something I like to see when I'm looking for price to go higher. This sell-off here, it doesn't worry me or concern me. It's just not the ideal behavior I like to see. What I think is forming is a new imbalance on the monthly time frame. And I'm going to show you some things on the daily, but first, this is what I want to bring to your attention. This is what the imbalance would look like if we were to close right now. So it'd be here and here. This space right here would be our new monthly imbalance, very similar to the one from the 3-month. So if I go back to the monthly, we would anticipate price to either leave this gap open and go higher, or the other thing that would happen is price would use it as a trampoline to then go higher. Okay. The thing is, based off of the candle, the current December candle, it looks like we may test it. We still have 13 days left in this month. Anything can happen. But based off of the way things are looking, and when I say the way things are looking, I'm looking at the body of this candle. We're underneath the open of December. And what that means is if we were to close like this, you have to think about each candle in relation to the previous candle. And what I mean by that is inside bars on higher time frames are extremely rare. And just to refresh your memory, just in case, this is your first time watching a video of mine, anything over the daily time frame, really anything over the 4-hour, if you take the absolute range high and absolute range low of a candle from the higher time frames, the next candle usually takes out the higher low. Okay, so you can see December took out the high of November, November took out the high of October, October took out the high of September. You get the idea, right? Each new candle tends to take out the previous high or low of its previous candle. Okay, if December closes bearish like this, think about it. What are we near in terms of the previous high and low? Well, we'd be closer to the low. And if we're closer to the low, that's a perfect storm for price to go down into the 480 range before going higher. Now, I know that's not what you want to hear, and that's not the, the bullish aspect of it in the near term. But what I want you guys to know is if price was to come down here, if price was to form this imbalance, right, you have to have December close to have it. If we formed this imbalance and we actually came down here below December's low, to test it, I'm not selling. I'm personally going to buy. And I'd like to get in at the 469, anywhere between 469 to 450 area, okay? Am I saying that price is gonna go that low? No. What I'm saying is it's a possibility based off of the current candle. Over the next 13 days, price could just launch higher and not even return to December's current low. But we have to look at what's actually happening and not speculate too much on what we want to happen, if that makes sense, okay? I really want to show you guys what the chart is literally showing me. So right now, the current candle is showing me that it wants to go below 482, okay? This is not a breakdown. Getting a new bullish gap after reacting off of a bullish gap is good. It's just that price may need to come back down here to refill the tank before going higher. It's completely normal, but it's not the near-term price action that holders want to see. So again, if this happens over the next few days, well, over the next couple weeks, right, we have to have December close first, and then January's candle would be the one that we would anticipate for price to come down here and test this. I'd be looking for a buy. Now, here's why I feel like price is likely going to form this gap and then potentially test it. Take a look at this. We're going to drop down to the weekly, and do you see, I'm just going to go into replay here. We'll move some things out the way. All right. Take a look at this. This imbalance right here on the weekly time frame. This right here looks very similar to what we have on the monthly time frame. Okay, now if you remember, the current monthly time frame candle, December is still open, but it looks very similar to this candle right here. Okay, here's the thing. Take a look at the open of this candle. The open is right here. Now I'm going to go down to the 1-hour time frame, and we're going to take a look at that week. So this right here marks the open. You can see Sunday, November 10th was the open of the week. And then here's Friday, Saturday, Sunday, right here. Right in here is the close of that week. All right. This is the point that I want to make. Take a look at how price moves away from the week open and comes back. It moves away higher from the week open, but comes back. Moves away from the week open to the downside and comes back. Moves away and comes back. Moves higher and comes back. For a whole week, price didn't actually have any type of real direction. It just whipsawed back and forth and was pulled right back to the weekly opening price, keeping the body of the candle small. All right. Many times, this behavior can be a sign of price wanting to pull back into the gap on the very next week. But as you can see, this time in this scenario, price actually left this open and continued higher. All right. We can get this type of behavior on the monthly time frame. So I go back to the monthly. We could see that here. But normally we get things like this on monthly time frames where you have a gap, right? You get that month that does a small body, and then the very next month is the one that reaches in and then starts to move higher. Okay, so it's a waiting game right now. I am still confident that 718 is our target, but it is a true waiting game. We have to wait for December to close. So let me go into logarithmic and show you something else. Okay, so we're on the monthly time frame. I'm gonna hide this really quick, and we're gonna pretend that this is the gap that we're gonna be working with going into January. We know that this is the target up here. We gotta go through this level, and I want you to think about this. And I want you to take a look at that previous area on the monthly right here. The first candle that goes into this imbalance closes inside. The very next month still is inside of this gap. Our target is here. Take a look at this. The third month, small body. Fourth month, small body. Fifth month, you still haven't hit the target. 5 months later, from forming this gap, you still hadn't hit this target. 6 months, still no target. 7 months later, you still have not hit the target. Okay, so if I draw a line out, take a look at this. Look at how just annoying this would be to see that finally, when you get a pop out of here, we still haven't hit external liquidity. We actually closed $7 short of hitting the target, and then the 8th month, boom, you finally got the pop. Okay, and this is all from an imbalance. Here's the thing about current price. I don't think this time is going to be like all of this, because these 6-7 months were pre-bull market. This was long before the bull market started. We're in the middle of a bull market right now. So if this becomes a monthly imbalance between January and February is when we'll have our answer. Okay, the breakdown for me is if price comes in here, fails to hold, and continues to go down to test this low at 276. Do I think Bitcoin Cash is going to go to 276 in the middle of a bull market? No. I'm just giving you this as an example to let you know this is the point when I would begin to raise an eyebrow at Bitcoin Cash. Like, okay, what's really going on? I get it. I know there are Bitcoin maximalists who want to see Bitcoin Cash fail. They want to see it die. There's a lot of entities out there who are shorting it. I get it. But personally, I think Bitcoin Cash has proven itself to be both resilient and useful, which is why I hold it. Nothing is frightening to me right now. It's just being slow. Okay. These are algorithmic movements, and when they're on the higher time frames, you just got to roll with it, right? You just have to wait. Bitcoin Cash isn't going to move like everything else, okay? It's just not our turn yet, all right? So if I go back to Binance, you can see, look at this, we're on the monthly chart, and I'm going to go to the 3 month. It took 1 3-month candle, 1 quarter for Binance to hit its external liquidity. But if we go to the monthly, you can see that there was also a monthly imbalance in here, right here. Price formed a swing low inside of this key level, and look, it took 1, 2, 3, 4 months before it actually got up there from the monthly time frame. If we go back to Bitcoin Cash, here we are, potentially in that same situation where we could reach down in January and see what happens following that. All right, so I guess I can give you guys a couple ideal examples. Okay, I have a PDF that I'll just give you a look at. Okay, so basically, I'll just give you a quick rundown of what this is. This PDF that I created, it shows you the ideal situations, the ideal reaction when price enters these areas of inefficiency. Okay, so this first one, I just call it an S grade fair value gap. And the reason for that is if you get a gap that's tested, the best reaction you can get is when the candle that tests the gap is the same one that follows through higher. So you can see that in this long candle right here. It tested the gap and it was the exact same candle that went higher. That's the best reaction you can get. And you can see an S grade fair value gap is the first variation you want to anticipate happening for your FVG in question. This is the highest grade because the candle that reaches into the gap is the same candle to leave the gap completely and expand higher, creating new displacement. All right.
Take a look.
So I just got an alert. Let's see what this is. Okay, this is the US dollar. I think it's going higher. Yeah. Yeah, so the DXY is going higher before FOMC. You can see it is also in a weekly area of inefficiency, and it's quite bullish right now, heading towards this 108 level. All right. But not to be distracted, Bitcoin Cash. Let's go back to that PDF. The very next type of behavior you can get is what I call the A grade. And this is when the candle that actually tests the gap respects it by closing outside of the imbalance. And this is what we saw happen on Binance. If I go back to the monthly, I'm sorry, the 3 month. On the 3 month, right here, we had that 3 month area, and the first candle came in, and at one point it was completely bearish, but we closed outside of the area, showing respect. Okay, so this would be the second best thing to see, because if you get respect, then it's likely that the next candle, right, will be the one to push you higher, and so on with displacement. Okay, all right, so perhaps you notice on your fair value gap it was retested for the first time and shows a nice reaction by closing outside of your gap, but does not expand on the same candle. When this happens, the very next candle becomes easy to predict. You anticipate the following candle to be the expansion away from your gap. All right, so this is what I would call an A grade. B grade is when things start to get a little not scary, but questionable. B grade is when the candle that tests the gap closes inside. In other words, it's not showing respect. If we close inside of a gap, that's not showing respect for that area of support or resistance, but it can still be bullish in this situation. So this time your gap is retested for the first time. That's this down closed candle, but it has closed inside the gap. When this happens, it's considered the first sign of failure, as price is not respecting your gap. In this case, we anticipate the next candle to take out the liquidity of the previous candle. And in this situation, we are sweeping the previous candle's low, and then you expect displacement away. So again, even when something bearish happens for a bullish scenario, it can still be bullish, right? And then the last one, which is the worst one, would be the C grade. And this is basically when you form a swing high or a swing low inside of a gap. All right. Now this is the one that's most annoying because it takes the most time to play out, and we can kind of see that on Binance on the monthly time frame. So if I go back to the monthly, you can see it here. So here's our monthly area, and you can see we have a low, a lower low, and a lesser low. 3 candles is all you need. Low, lower low, lesser low. That is your swing low inside of a key level. And you can see from there, we got 1, 2, 3 months later, we hit the target. All right. So this is a C grade on the monthly chart, but on the 3 month, it's an A grade because we also had a 3 month gap there. So there's time frame correlation. This isn't always the case, right? You're not gonna always have a higher time frame gap in the same area as a lower time frame gap. That doesn't always happen. What I'm just saying is these variations can kind of give you an idea of the scope of time it takes for these things to play out. All right. I say all that to say, continue to be patient with Bitcoin Cash. And if you start to see news of Bitcoin Cash crashing and going below 486 after December has closed, it's an opportunity to buy. So keep this area on your charts, and keep in mind December could make a new low. If we make a new low, then we don't have a gap yet. We need December to close. From there, I'll be watching to see how January reacts to whatever December does. Okay, if we start to push back up to December's current high, great, that's ideal. But based off of my experience in the way that these candles look, let me show you this on the daily. Take a look at the daily chart. We do have a daily gap that's bearish that was formed on December 10th, but this isn't what really concerns me. What concerns me is this right here. Take a look at this week of price action. I'm just going to make it a different color. For almost 8 days, look at the daily candles. They're not going anywhere. They're just back and forth, back and forth. They're just chopping around. Okay, to me, this is the behavior that says, all right, I want to purposely hold price until December close. And when I say I'm speaking about the like an algorithm. This is an algorithmic move where price is being held for the sole purpose of forming a monthly imbalance. I won't know for sure until December closes, but these are the telltale signs early on. I'll be looking again to see what happens during FOMC. It's sounding an alarm to me that this will be a bullish imbalance, and a bullish imbalance is a good thing. Okay. Now, here's the thing that you want to also watch out for: Bitcoin dominance. So if I go to the weekly chart, and I posted this on my YouTube timeline, take a look at how Bitcoin dominance had broke down for 3 weeks. And then on that fourth week, we came in to test this area of inefficiency. Naturally, you would expect price to go lower, because if you look at this, the week that tested it, look at how we respected it. We closed outside of the imbalance. Per the PDF, this would be an A grade, okay? Where you close outside the gap, the next candle should go higher towards external liquidity. So it'd be opposite here. We closed outside the gap. This current weekly candle would naturally go down here. That's if this area was to hold, right? Because this is a bearish gap. Here's what's interesting. Instead of price going lower, it is now going higher, and it's already broken above previous week's high, all right? So now we are showing disrespect for this bearish gap. If dominance starts to go back towards the 61% dominance area, all alts are going to bleed, because that means the majority of inflows are going back into Bitcoin and money is slowly leaving alts. It doesn't mean that there won't be an alt season. It just means it's not time for alt season to really kick off, because the lower the dominance goes, the better that is for alt. If price was to break down towards this weekly external range liquidity, that to me is when Bitcoin Cash hits that $718 level. Okay, here's why I say that. If I go to the daily, take a look at when the dominance was at its lowest this quarter. Okay, so this is Saturday, December 7th, and we were hovering around 55%, right? If I go to Bitcoin Cash, here's December 7th, and we're hovering in the low 600, right? This is like the highs of this quarter. So it's correlated quite well with dominance, right? Inverse correlation is when dominance is lower, the alts are rising. So dominance is going to play a huge part. Going back over to take a look at dominance, this right here is alt season. Okay? This is not the grandiose alt season that we want. Now, if you look at this as it was occurring, at first, yeah, it kind of looks like, oh man, this is it. We're doing it. All right. First 3 weeks starting to drop. But when you see price start to turn up, when you see dominance start to turn up, then there's no surprise why we have red across alt. All right. So keep that in mind. All right. Don't forget that Michael Saylor has found a way through his infinite money glitch to allow investors to get exposure to Bitcoin and its volatility without the downside risk. Okay. Hence why people are buying in at these current prices. Okay. He's done some crazy stuff to make this stuff happen. All right. So with that being said, I still believe Bitcoin Cash is on target, but my main thing to watch right now is how December closes, so I can know where my drawing for the imbalance will go, and then watch for December to see if it will test it to go higher, or will we just leave it open and push to our target. All right, that's the update for Bitcoin Cash. I hope this made sense. I hope you enjoyed this, and I will see you in the next one.